Micron Technology supplies memory and storage hardware to some of the world's largest companies. Its DRAM products help to power iPhones, smart vehicles, data centers, and more, while NAND, flash, and SSD drives are used for storage. Based on the latest share price, Micron has a market cap of $81 billion. With $12 billion of cash and investments and $12 billion of long-term debt, the enterprise value is roughly the same. Meanwhile, the company has produced $23 billion in revenue over the last 12 months, $9.6 billion of EBITDA, but only $1.6 billion of net income. So Micron is valued at 3.5 times revenue, 8.4 times EBITDA, and 51 times earnings. Micron is a tricky company to value. On the one hand, the company should be well positioned as a beneficiary of huge trends like artificial intelligence, 5G, and electric vehicles. On the other hand, Micron is a cyclical stock that has seen wild swings in revenue. Revenue collapsed 23% in 2016, 23% again in 2019, and this year looks like it will see a similar decline. Even worse, margins collapsed in the last quarter, with the company posting a negative gross margin of minus 33% and a record loss of $2.31 billion. The Micron CEO said that the semiconductor memory and storage industry is facing its worst downturn in the last 13 years, with an exceptionally weak pricing environment. And Micron's figures were published before news that China is to ban sales of Micron's memory chips. Micron derives more than 10% of its revenue from China, so this news should be significant. And yet Micron stock is up almost 8% since the news broke. So what's going on? The main reason is the blowout earnings from Nvidia, which is providing a tailwind to semiconductor and memory stocks across the board. Data centers and large language models require large amounts of memory, so Micron is seen as another AI play, and Micron's products are in high demand. But Micron still struggles to maintain pricing power. Super investors like Monish Pabrai claim that shrinking competition in the memory business will lead to more stable pricing and smaller swings, but that is clearly not playing out, as seen by the recent collapse in revenue. Meanwhile, China has the resources to invest heavily into this market and potentially become a major player. Overall, there's not enough evidence that Micron can escape the cyclical nature of its business, and that makes the stock a risky bet. However, the AI trend is so big that Micron is probably going to ride the AI hype train for a little while longer. Artificial intelligence is clearly not a fad, and it's something that big companies are spending huge amounts of money on. That's why I'm giving the stock a cautious bullish rating, but these are my personal opinions, not financial advice, and I do own a small position in the stock.